Unfiltered, the real challenges and triumphs of a full-time investor with Adam Kitchener. Greeting friends, this is the Truth About Real Estate Investing. And I'd like to say thank you to everyone who attended the How to Invest in the USA workshop this past Saturday. The recording will go out in about a day or two with the research I prepared on the best places to invest in the USA for 2024, along with my tracking of 23 at present 23 new manufacturing facilities. I'm laughing because I add about 2 every week as I find more in my continued research. Again, 23 new manufacturing facilities being built. I'm setting my criteria at $1 billion investment or 1,000 job potentials being created. So that's a combined, right now that list is a combined $224 billion invested, that's US dollars, for a potential job creation of 69,200. Now compare that, that's a big number, yeah. So now let's compare that to Stellantis, the former Chrysler and Volkswagen investments in Windsor, Ontario and St. Thomas, Ontario, respectively, for a combined 7.8 billion US and 5,500 potential jobs. To summarize, the US population is 8.6 times bigger than Canada. I know everyone thinks it's 10 times bigger. Shout out Antonio. but with historic immigration over the last few years, it's now 8.6 times. Anyways, to summarize my research, for every new manufacturing job created in Canada, the Americans create 1.47 jobs. So almost 50% more job creation per American. Per job created. For every dollar invested into new manufacturing in Canada, $3.34 is invested in the USA. So the Americans are investing about 3 times as much as we are in new manufacturing. And that's important because every new manufacturing job usually has a spin-off of 4 to 5 jobs. That's per Elon Musk, who has a little experience in that area. And just ask any politician, they all want jobs for their areas because that means a growing economy, that means more jobs, it means higher growing incomes, and that generally makes people happier when they have growing incomes. So the divide in productivity between the economies between Canada and the US, it continues to grow. It's actually quite well documented by our media. They've done a really good job in doing so. I posted an article from Better Dwelling Canada. The headline is Canada's economy falling behind, US growing 10 times faster per capita. Yes, it's bad news. I've got images from the article, and I'll post a show link I'll post a link in the show notes as well. On a personal front, the flights are booked for Cherry and I for our post-tax season workcation in Atlanta and Savannah, Georgia. We're going there specifically because Georgia's getting a ton of investment, tons and tons and tons. Specifically Savannah, where I'd like to buy a property, they are getting a new Hyundai plant. So Hyundai, the world's 3rd largest manufacturer in the world. I believe they're actually the largest company in South Korea as well. Correct me if I'm wrong. Anyways, they're probably top 3. We're splitting hairs here. Anyways, the Hyundai and the government of the USA in Georgia are making a $7.6 billion investment for a potential job creation of 8,500. And Savannah is not a very big town. So I got to imagine that this will put a lot of pressure on rents and prices. Hence, I want to get in there before their doors open and the floodgates open for new employees, who will make an average of high $50,000 per year plus benefits. So if you do the math, like 56,000 American is about roughly getting close to 80,000 Canadian. Sorry, 58,000, 56,000 American is getting close to 80,000 Canadian. Our dollar is not doing very well these days, thanks to the divergence in economies. But anyways, the average employee at many of these manufacturing plants, they will make more than the average household in Canada. So that's a good sign of attractiveness for people, where people should be moving. Anyways, we booked ourselves in for an Entrepreneurs Organization Atlanta event as well. They actually have a networking learning session going on the subject of hospitality. Cherry and I love to learn, and we will be meeting fellow 7-figure entrepreneurs from the Atlanta area. Hopefully I'll get to meet some real estate investors as well. Quick market update. I think I shared last week, but I'll share it again. From my experience in the markets that I monitor and operate in, from basically from Toronto to Niagara Falls, KWC, Windsor, single family houses that are not tenanted, repeat, not tenanted, houses that are on land are fully into seller's market mode. We're seeing multiple offers on duplexes again, which is great news for my clients and I, as that's what we primarily hold. I'll be selling one of my own in June as my tenants are moving out. So I'm currently monitoring prices closely so that I may strategize on what renovations I need to do in order to maximize my return on investment. And of course, I'll give that same advice to my clients. The rest of my Hamilton properties, I'll hang on to 1 or 2 more years. As CMHC last week or 2 weeks ago now predicts that we'll be back at peak prices by 2026. So then I'll sell my houses to the highest bidder. Typically, those are owners who will occupy the house, as that's my experience, as they typically will outbid investors. And sadly, rental supply will be removed from the market. This is only natural since our governments do so much to deter real estate investment. Rent control, rental licensing, Hamilton's anti-rent eviction bylaw. And the point about rental control, I'll include a link as well. In case anyone missed it, back in 2022, both the provincial Liberals and NDP have both said they would return rent control to how it was previous to 2018. So what happened in 2018? Doug Ford created that rent exemption where new construction, anything built after 2018, would no longer have rent control. Again, the NDP and Liberals for Ontario have promised to remove that. And sorry to Doug Ford, well, not really sorry. No politician lasts forever. So at some point, we'll no longer be under under PC party in Ontario. Whichever party will win, likely NDP or Liberals, will remove said rent control. So back to the market update. Condos, new construction, and the further you are away from Toronto, they are facing slower markets, except for Windsor. Windsor is an exception because of all the investment going on. I feel sorry for all those struggling with properties in condos, new construction, and further away from Toronto. And I feel bad for the realtors who sold those properties. Keep in mind, if a new construction condo does not close, the realtor who sold it has to return their commission. Typically, they have to return their commission. And typically, commissions are paid. They get 2% commission after the purchase goes firm, and another 2% after closing. That's a lot of money, by the way. That's tough times for many. And of course, I feel especially bad for condo investors who are returning their units, which is happening more often than people suspect. So again, reminder, in my experience, I've got a lot of experience as well. To avoid tough times, avoid over leverage. Keep in mind, like, everyone who's going bankrupt these days or gone bankrupt previously was typically because they couldn't handle the cost of their debt. So it would make sense to avoid over leverage and expensive debt. Invest only using best practices where economic fundamentals make sense. If you're not sure how or where, I've consolidated my research. I've done a lot of research into our pivot into the US for our investing. I prepared a report called Best Places to Invest in the USA for 2024, including that list of 23 new manufacturing plants being built by the likes of, these small companies you never heard of: Honda, GM, Ford, Toyota, Intel, Samsung, TSMC, the world's largest private manufacturer of microchips, Texas Instruments, LG, Hyundai. The list goes on and on. If you're interested in investing in areas with the future, thanks to billions of dollars of investment to create thousands of potential jobs, my report's a great place for you to start your research. And I had a really difficult time compiling a list of all the manufacturing investment going on in the States. ChatGPT and Google failed me. It was more like a piecemeal project to get this research done. So to receive the report for free, just simply go to my website, www.truthaboutrealestateinvesting.ca. On the right-hand side, you'll see, you can just grab the report from there. Just give your name and email, and you'll get a link to download the report. Again, that's truthaboutrealestateinvesting.ca. And again, it's a free report. I am a big fan of education being as affordable or even free as possible. So please enjoy. On to this week's show. We have my friend Adam Kitchener back on the show, and we get along well because he keeps it real. If you couldn't tell, I prefer to have conversations around the truth about real estate investing. There's no pictures of him on a private plane or luxury vehicle or luxury watches. He actually does have a picture of himself on a private plane, but it's obviously photoshopped, and he's poking fun at the phonies that are out there. Don't get me wrong, luxury stuffs are great. I personally love it when people celebrate their success, and reward themselves in things that they're passionate about. Keep in mind, though, most successful people, in my experience, don't brag about their wealth. If you don't believe me, read The Millionaire Next Door. And the book describes 99% of my millionaire clients exactly. Why would anyone brag publicly about their cars or watches or gold chains on social media? That simply makes them a target for robbery. And imagine your tenants see that. How would that work out in a good conversation when you're trying to collect rent or they're behind on rent? So Adam actually rips people pretty regularly who do such things, and those people tend to turn out to be frauds on social media. On today's show, Adam recounts his trials and tribulations of being a full-time active investor. He shares how he finances deals, including private money, the numbers on the deals he's done, why he considers them deals where things haven't always gone well, how cash flow and timely execution is paramount to survival, and he pulls those punches. It's not sexy. It's actually downright nasty at times. He's been assaulted. He's been harassed by tenants. Tenants have complained about him to the police, and he's been arrested. He's bought houses with backyards littered with used syringes from drug dealers. Investment-wise, he's done excellent, and he's well set up for the future. But it's far from sunshine and rainbows, if you can't tell from this introduction. Adam is a very kind guy, and so do feel free to reach out to him on social media. He's happy to take a question or two from anyone who needs a second opinion on anything real estate related. You can find Adam Kitchener on Instagram and Facebook. I've got shown links in the show notes. Please enjoy the show. Hello, Adam. What's keeping you busy these days?
The Ontario real estate market.
Yeah, but that's always keeping you busy.
Yeah.
What about it specifically?
The downfall of Ontario real estate investing. I mean, we've seen some big names drop out of in the newspaper. We're seeing all these investment groups going under, even large developments like billion-dollar companies.
Yeah, the Sam Mizrahi project in downtown Toronto.
The one project, right? He's got another one in trouble now with the Hazelton, 129 Hazelton. There's a demand letter there. So we're seeing large players and small players, and then somewhere in the middle, those other you've got the small guys who have gone down, some small capital companies, and then we've got the largest northern investor in Ontario is going under, and then you got the billionaires going down too, all in this Ontario real estate market. So it's been interesting for me to kind of navigate this and watch and see what's going on. And even myself, I've seen myself, I'm definitely not doing very well in this economy either, right? So
I don't think any investors enjoying this period.
I think if anyone is saying that they're doing well in this economy, they're lying. Unless they're a seasoned landlord and they've owned their properties for north of 15 years, maybe 10, 15 years, everyone's struggling. Every single landlord in this province is
There's shades of it, right?
Yeah. It's going to depend. It's going to be varying degrees of struggling. Some are very much underwater. If you're highly leveraged in condos or things like that, I think you're probably looking for some sort of windfall or big sale or something like that. If you're into long-term multifamily and you're not overly leveraged, you're doing okay.
Yeah, you're doing okay, but you're probably annoyed with how long it takes for like your refinances to happen.
Exactly.
Right. That is I think 90% of Ontario landlords would love to have that as their worst problem.
Yeah, I mean, what refinances at this point? I mean, it is incredibly hard to refinance, right now, especially if you have private debt, because you're looking at that private debt saying, oh, you can't afford that. Yeah. It's like, well, yeah, if you refinance it, then I can afford it. Right. But the banks don't look like that. I mean, I think
especially CMHC doesn't approve many lenders.
Correct.
Right.
I think the biggest thing too is a lot of landlords think to themselves, the problem is it's kind of like in good times it's great because if you can sell a property, you can refinance a property. But in this economy, you can't sell it, which means the bank doesn't refinance. The banks always win. They don't want to be in a position where they're stuck with your property. That's how Canadian banking laws are created, which is also why I didn't think things would get as bad as we are, because we're seeing a lot of delinquency, we're seeing a lot of foreclosures, and I honestly thought that the Canadian banking system was built to not have those problems. If you look at America, you've got, in 2008, 500 banks went under. hundreds of millions of dollars was lost and people lost millions of their homes. Where in Canada, we've never seen that sort of drastic thing because of the laws and the way they're built. We're socialists.
Not since like the late 80s.
Correct.
Yeah.
And that's
So
because
it's been a really long time.
we're socialist, right? And in that respect, that's kind of a good thing because the banks, and that's why our banking laws are built that way. I mean, you can get 10% down on a single family home because banks know that your house isn't going to drop more than 10%, usually. Multifamily.
And they're holding the mortgages too.
And they're holding the mortgages.
It's totally different than the States.
And they know they can also sell your house, right? So they've built in a buffer, they've built in their protection so that they never end up at a loss on your house, which is, I think, the mindset that I went into 2022. Because I mean, the banks, the Canadian economy was going for shit, and and they're like, well, we're going to start raising rates. Okay, well, it's 2%. The stress test is 5.6.
Yeah.
We're not going to go past that. Because that's the stress test.
Yeah.
That was my thinking, because it's like, if you go past that, every Canadian mortgage holder is going to start getting wiped out.
Yeah.
We don't do that in Canada. We want people to hold their mortgages. Even the banks want Canadians to pay their mortgages. They don't want your house. We do not want to see what happened in Alberta, where people just walked away from their mortgages. So
Yeah, people were underwater. Yeah.
a lot of people were underwater, and
Back
the mortgages,
in like the 07, 08,
right?
oil crashed. Yeah.
So that's where I thought, I'm like, okay, we're gonna tighten the strings. We're gonna make people feel it, but we're not gonna go past that 5.6. So yeah, that's kind of where I kind of thought about the buffer. That's where I was like, okay, so we might get to 5, and I could survive that. I mean, I'm not gonna be happy about going from 2.5 to 5, but I certainly don't think we're gonna go to 7, especially when the Bank of Canada came out and said we're not going to raise interest rates, and we're certainly not going to do it 10 times in the next year. And I think that mindset is why I was still somewhat less bullish, but a little bit bullish on Ontario real estate, knowing that you ride the wave, you keep going. You might not be able to do as much as you used to, but you just kind of adjust for that. And then obviously a lot of other investors thought the same thing, and also bet on appreciation. I never bet on appreciation. I bet on cash flow. That's all you can guarantee. Anyone who bet on appreciation these days is probably in trouble, and that's what you're seeing in Ontario right now.
So now, Adam, you're younger.
Yeah.
Can you share your age?
31.
How long have you been investing for?
I mean, I grew up in real estate. I bought my first property in 2017, so I think it was 25 then.
Yeah. Okay. So, like all these folks that we mentioned, at least on the not the Mizrahi project, obviously, but everyone else that we know of that has significant public bankruptcy, creditor protection issues, they were all generally younger.
Yes.
And they all had started around the same time you did.
Yes.
So I think it's important that how would you describe where you are right now? Is it survival mode? Like, for example, I talked to many investors.
Huh.
Like there's a saying within the community, survive till 2025.
Yeah.
Right? Like 2024, 2023, for many of the smart money was about preservation of capital.
Yes.
Not return on capital.
Yeah.
Right? Versus we see some people that were still raising money hard. And actually I want to say something. Like, I don't know why we got away from the term, but 5 years ago we used to call private money hard money loan.
Yes. Yeah.
Right? We got away from that somehow, because promissory note, that's a promise.
Yeah.
No one breaks promises.
No one breaks promises.
No one breaks,
it sounds
but it's
prettier.
a hard money loan.
Yes.
Right? And then when people, because the connotation is with a hard money loan, if you don't make payments, someone's coming to break your thumbs.
Exactly. So we
that's
painted
very bad branding.
I mean, that's why we don't call ourselves landlords. We call ourselves housing providers.
Yeah. Home service provider, I like.
Right, home service provider, because freeloading parasite just sounds terrible.
So I want to get into how have you defended your portfolio, because you are on the aggressive side.
Yeah.
Right. From the outside looking in,
yeah,
I would consider you on the more aggressive side. You're in some secondary, you're in some tertiary markets.
Yeah.
You take on private money as well.
Yeah.
Can you explain your strategy and how have you survived?
So I'm gonna make sure that the iWin logo is always facing the camera, just for promotionary period. You can send me the 5 later. I'm aggressive, but I'm also very conservative in how I look at my numbers, right?
Yes.
So I've never bet on appreciation, and in tertiary markets, that's a good thing, right? And I'm always looking at the cash flow. So I've always looked at properties and thought to myself, okay, so what's the closest market to me? So I would look at a place like Simcoe, and that's 20 minutes outside of Brantford. When I bought in Simcoe, I was buying a fourplex for, say, $300,000-$400,000, but in Brantford, that same fourplex would be selling for $600,000. So I'm buying at a lower price point. But if you're looking at the rents, they're comparable. I'm getting 80%. In some cases, I'm buying real estate at 50% and still getting 75 to 80%. So my cash flow is significantly better on those investments.
Right.
So I'm always preparing for the worst. I think that 2023 and 2022, I underestimated what my worst would be. But I always knew that the market was never going to be the same. Especially in 2020 and 2021, I was like, these glory days of easy refinancing are going to come to an end. When? I don't know, but I always had that in the back of my mind. So I was able to continue to push forward and be aggressive because the market allowed me so. But I always thought to myself, what happens if this stops, right? What happens if I can't buy as aggressively as I used to? And at this point, that's the case. I can't buy like I did in 2020, 21. So I think that's kind of what's kept me afloat. The other thing too is up until I think basically pretty much 2022, I was aggressive in the respect that I looked for deals and I didn't care what that deal was. I live in Hamilton. I've got properties in Brantford, Simcoe, Wabashine, Ramera, Port Colborne, Ingersoll, Woodstock. Like the Johnny Cash song, I've Been Everywhere, that was my investment portfolio. Mm-hmm. I wanted to be able to sing the song I've Been Everywhere by Johnny Cash, but using only portfolio cities in my portfolio. And up until now, that served me very well because I find a deal, and if there's money to be made or if there's appreciation to be created, mm-hmm. I did that. Mm-hmm. Now that this market has shifted, I've also reevaluated my investments and looked at myself long term also. Because also the management of property so far away from each other is not realistic. And I don't regret any of my investments, and I don't care if my investment's 2 hours away. It's still a good investment. It did what it needed to do. I did a fantastic project up in Gravenhurst, and the numbers performed very well. It did what it needed to do. Now, as a long-term hold, does it make sense for me to hold a property that's 2 hours and 20 minutes away? No. Right. So my thing going forward is I'm going to sell the one in Gravenhurst and replace those 4 units with 4 units in Brantford, right? Something that's closer to home, and staying in those markets. So I'm looking at Brantford, I'm looking at Simcoe, I'm looking at Woodstock. Those are going to be my investment regions.
Right. Because it's all within 45 minutes drive for you.
Exactly. I mean,
much more reasonable.
Yeah. And also, well, the other thing too is my contractors too. I'm starting to consider them as well. For me to find contractors in all these little markets is incredibly difficult. So most often I would end up taking my Hamilton contractor and dragging him all across Ontario. Right. Which is, and I mean, when you're doing a large renovation, if you're renovating 4 units all at once, you put them up in a hotel Airbnb and you get the thing done in 2 months, cool. But what happens when the tap is leaking? Then you got to find a local plumber and all that sort of stuff. So that's where the maintenance side of things start to mm-hmm. Become a little bit more of a time consumption and pain in the butt to deal with. And for me to send my Hamilton plumber to go and deal with a tap 2 hours away doesn't make sense.
He won't do it.
No, he's not going to do it.
He will if he bills you for 2 hours.
Exactly, but it's a poor use of his time. It's a poor use of his his value as well. Yeah. So sorry, Adam. I want to pause you for a sec because I want to drill home some of the different because whenever there's significant loss in real estate businesses, yep. I study it. Yes. Because the old saying, those who fail to learn from history are doomed to repeat it. Yep. Right? So I need to understand what they did in their business models that cost them. Yep. I'm not looking for celebrate people's losses or anything. Yeah. I just want to understand what went wrong. Yeah. So then I can, learn from history, protect my clients' interests, make sure they stay safe. Yeah. Now, for example, the Northern Ontario landlords, yep. They had vacancy over 30%, structural yes. vacancy. So from the outside looking in, it looks like they weren't even advertising units for rent because these places needed renovation still. Yeah. So they were, it wasn't just tenant turnover that they had 30% vacancy. No, exactly. They weren't even ready to be rented. Well, a lot of that was probably forced turnover. They got very aggressive on the forced turnover. That you don't get 30% naturally. There's probably one of two things. The properties were in such a state of disrepair mm-hmm. that they weren't even rented when they bought the places.
Right.
And there was probably a significant reason why they weren't rented.
Right. Well, this was a BRRRR model.
Yeah.
You know, an ideal BRRRR model typically is you buy a really underpriced property because there's something really wrong with it.
Exactly.
The bank won't touch it. That's why you're using private money, preferably your own cash.
Yep.
Then you take a lot of risk out. Now, like you do the same though. You take
Correct.
on ugly properties that
Yes.
the bank won't touch.
Yep.
So let's get into the basics. Like, tell us about a past property that was pretty ugly.
Well, I think the one big difference between me and them too is also the scale and size of which they were trying to do so, and it's a lot more difficult. It's if you have one flip on the go and you went into 2022 as it slowed down, you were probably able to sell that. But what happens if you're 6 and 7 or 20 flips in? Like there's a lot of people who are like mid projects, halfway through on a lot of different projects. It's like if you've got to exit out of one property or you have to carry one small percentage of your portfolio because it's just lagging, you're going to be able to survive that. But I think a lot of these guys kind of went way past that point and got themselves into a position where, you're 30% vacant and you can't sustain that. Where, I typically would do one project at a time. Now there was, even last year, they started to pile up because I wasn't able to refinance them into preferred lending terms. Or I was, but I wasn't able to pay out all of the capital that I had invested into it. So the model was always, you go in, you fix up the roughest building. Like I tried to find the roughest building that I could find,
right.
Dump 200,000 into it.
Like, paint us a picture of the roughest property. What made it so rough? What made it so that the bank wouldn't touch it?
I mean, you're looking at, bad plumbing, bad apartment designs, just rough. I mean, even like the exterior needs to get done. I mean, I'm
bad
looking
plumbing
for
alone would not qualify you for insurance.
No, exactly. I mean, you've got
no
galvanized,
insurance. There's no mortgage.
Exactly. Outdated electrical systems like
Same thing.
Yeah, you got.
You're not getting insurance. You're not getting a mortgage.
So like I'll buy a place with knob and tube. I'll buy a place with 1 meter where there should be 4.
Yeah.
And I'll deal with Hydro 1 and split the systems up. And so when I go into
and then how are the tenants? Are they like doctors and lawyers? Are lovely, like white collar, 6-figure earning people?
Absolutely. So they're usually.
This isn't a social media ad.
The one guy is he's a doctor. He's dealing drugs, fentanyl. Sorry, he's prescribing fentanyl.
Okay.
Yeah, he's prescribing fentanyl to all of the individuals in the neighborhood.
Right.
So I
if anyone doesn't tell, you can't tell we're being sarcastic. Fentanyl, I believe, is a medication that can be prescribed, but in excessive doses, it's obviously dangerous.
It's fatal.
And,
So I had a guy who was dealing fentanyl in one of the properties that I had acquired. And even the cops were just like, the neighborhood was basically like, hey, we're living next to this drug head. And the cops were like, what do you want us to do? And they're like, get rid of him. And he's like, landlord-tenant board. Like the cops are there to keep the peace. They don't do anything. Meanwhile, in the backyard, he's got needles everywhere. Like there's a new immigrant family living on the first floor.
Wait.
Wonderful.
This isn't what is this? Triplex, fourplex?
Fourplex.
Fourplex. And he's got needles all in the backyard.
In the
common area.
Yeah, in common area, there's needles in the backyard, and the new family on the main floor, new to Canada family is living on the main floor, and they're terrified to live below this guy, literally living below this guy. And do you think the kids can enjoy the backyard? No, they can't do that. The guy who bought the house next door, he moves in from Toronto, and he's like, oh look, this is a nice little town. Moves in right next to the drug dealer. And he's like, I'm going to sell my $1 million property in Toronto, buy something a quarter of the price, live here, gentrification, all that fun stuff, and ends up living next to the drug head. So I ended up trying to deal with him.
Well, not just drug dealer. So there's regular traffic of people coming to buy drugs.
Absolutely.
Right? Which is what you want in your neighborhood with
kids.
And
when I bought the property, the cop looks at me and he goes, well, you just want to get him out because you want to raise the rent. I was like, actually, I don't actually. I mean, to be honest, he was paying relatively close to market rent. I mean, he wasn't actually paying his rent, but had he been paying his rent, he would have been pretty damn close to market rent. The reason I want him out is because the neighborhood wants him out. I'm doing this is a safety thing. I'm not trying to.
Excuse me, the cops aren't building a case against a drug dealer?
Well, he had an active criminal charge. It was published. He was caught with dealing fentanyl. He had weapons charges and all that sort of stuff. He's not in jail? Not yet. We got to wait for cases to be heard before a judge. So he's just out and about enjoying his life, and
he's still in the property.
He's still on the property.
How long you owned it for?
Well, I had bought the property with him being the problem. So the previous owner must have dealt with him for years.
Right. And so let's take a step back. Imagine you got a pretty good discount because nobody wants to take this on.
Correct.
Right.
And I mean, and that's part of the problem with the system too. I mean, that's another landlord who basically exited the industry. He's like, screw this, I'm not dealing with this.
Yeah, and he'll never be a landlord again.
What's he doing? He's trying to go through the landlord tenant board. So they're 2 years.
Yeah.
We're waiting for him to go to jail. That's 2 years. You know, like.
It's 2 years for an active drug dealer to go to jail?
It's going to take time to go to court. I mean, it takes a long time from charge to hearing to actually like get stuff done. I don't know from the criminal side, you know. I've never had to go to jail for, you know, any reason really. So, you know, but I got close there, almost. Yeah, no, right. The tenant was just off by a little bit, and so.
So you're still dealing with this?
No, he's gone now. He's gone. Yeah, the tenant has now found his way. Ended up giving him some money, cash for keys arrangement, because it's the quickest and easiest way to remove a problem from the building. Now I've got neighbors who are happy with me. That building has now got is going to have 4 brand new families happy to live there. You know,
right. In a needle-free backyard.
In a needle-free backyard, exactly.
You're an awful person.
I got rid of a drug head out of my building, and yes, I'm an awful person because I have now opened
because you collect rent. You're hoarding properties.
For hoarding properties, exactly. And that was the landlord's. That was the officer's look to me. He's like, "Oh, you're only doing this because you want to raise the rent." I was like, "No, buddy, I'm doing your job." You know. And I mean, say what you will. I mean, him. Some people are gonna have some no sympathy for. I'm trying to look at it from an empathetic view. I mean, that guy can't be in the private market. He needs to have wraparound services. He needs to be in rehab. He needs to be in a halfway house. He needs access to services that he's clearly not getting.
He should go to jail first.
He should go to jail, and then when he's released, he can't be released into the private housing market. He needs to go to take those necessary steps, right, and get off the drugs and deal what he's dealing with and all that. But as a landlord, that's not my job.
Yeah. You're a private citizen.
I'm a private citizen, and I'm a housing provider, as is every other Ontario landlord. We are not housing providers. We are psychologists. We are caretakers. We are babysitters. We are taking care of full-grown adults. Mm-hmm. But are we given resources? Mm-hmm. No. I'm not. I don't have a degree in social work or psychology or anything like that. I'm not even given tools. I mean, if he's dealing drugs in the backyard, can I stop him? No. Mm-hmm. The cops can't even stop him. What do they expect me to do? Right? So, and this is the sentiment that's heard across all of Ontario. You have one problem tenant in your property, and it affects the other tenants.
Because the other tenants will move out.
They move out. And it's not fair to the tenants. Now you have
massive vacancy.
You have massive, and what are you going to do? Re-rent it?
Good luck.
Anyone who walks through the building is going to see what's going on. So you have to remove the problem.
Yeah, wait till it snows and covers up all the needles.
Exactly. Yeah, you wait till the winter, and don't build any snowmans. So instead of a carrot nose, it's a needle nose.
Oh my God, you went there. Wait, so how is the building now?
It's getting renovated. Yeah. So I'm renovating it top to bottom, brand new floors, kitchens, bathrooms, the whole 9 yards. Given the fund interest rates that we're paying, I'm not doing as extensive a reno as I would like.
Right.
There's a lot of things I'd like to do, move layouts around, change, make them more efficient. But we're living in an environment where it doesn't actually even make financial sense to be a landlord. So I'm just doing it to get the cash flow rather than having a building sitting empty.
Right. So so the scope of the project's come down because
substantially.
Yeah.
Yeah.
How are you financing the renovations?
It's still private money. Yeah.
Can you elaborate on that? Is that a second? Is that a promissory note? Is that even?
Yeah. So I don't do promissory notes. I don't do OPM, other people money. I have never gone out onto the internet and been like, hey, you should invest with me because I'm a brilliant dude. No, I go through a MIC, mortgage broker type person. They get the cash flow together. And it is most likely investors or someone's private personal money. Mm-hmm. But the way I get it, it's secured through a mortgage broker, and it's secured against my other assets, right? So I have a portfolio of properties. Some are under leveraged. So we use that. If I have a mortgage that's 40% loan to value, we'll bump it up another 20, 30% to get the private money to pay for the renovation that I'm doing. And at some point I refinance and pay back that private money.
What are the terms these days? Like, what kind of terms are you looking at?
12%.
For a second?
Yeah.
Second mortgage? Yeah.
It's about 12%.
That's about market.
Yeah. So,
And then lender fees. There's usually lender fees with these.
Yeah, it's about 1% lender fees. I
Well,
mean,
that's not too bad.
to be honest, I could have hired an employee. Like the amount of private, I went
The amount of private money flying
private
around?
money that I like paid in fees. Oh, I could have like a full-time employee, pay him a very good salary, and all of the
private money.
you know, and same thing with legal fees. I'm almost at a point where I'm like, I should just have a lawyer on staff. I mean, it doesn't really actually save costs because when you borrow private money, you also have to pay their legal fees, and some of the legal fees that the private money charge, I'm like, how are you 3 times the cost of my lawyer? My lawyer can close a deal, for a couple $1,000, and they're like $4,000, $5,000, $6,000. I'm like, you're not doing any more work than my lawyer.
They could be fancy Bay Street lawyers.
Yeah.
Rent's expensive.
So
I feel bad for the landlords.
The lawyers, I feel sorry for the lawyers. They got all that high rent and those degrees to pay off.
Well, some of them are dealing with messes. I was talking to a lawyer yesterday who's got a lot of people coming out of the woodwork who have mortgages related to those landlords up north.
Yes, the foreclosures and the mess of that. Yeah. It's kind of.
Oh, sorry. Let's finish off this fourplex, for example. Though.
Yeah.
What will the rents be when you're done?
We're going to be looking at $1,400 for the 1 bedrooms, and $2,000 for the 3 bedroom. I have 3 1 bedrooms, and 1 3 bedroom. So it's going to make about $6,000 a month.
And what did you pay for it?
I bought the building for $600.
What city is it?
Simcoe.
And then what's your ARV? Your after repair value?
It should be worth $950. Based on other Simcoe properties I've bought and revalued. So, yeah.
What was your renovation budget?
$100,000.
Oh, it's a pretty good uplift.
Yeah.
So just to summarize, 600 buy, 100K with a whole lot of headaches.
Yep. Yeah.
So you didn't factor in your grief.
Correct.
You haven't factored in your TM and your grief, but at 950 after repair value. Sounds like So it sounds like you'll be pretty well off.
Well, I know that right now, based on current lending, like I've spoken to brokers and they're like, we're gonna get maybe 640 on reappraise, like on a mortgage value.
Right.
So I'm still gonna be in the property for a substantial amount.
Did you go down the road of commercial financing yet? I know we chatted about it.
Yeah, so I'm currently talking to a broker right now about an exit strategy for the property, but it's not going to be a clean, like I'm still going to have renovations into the property. It's not going to be eaten up into the mortgage. So I'll be having my mortgage and then the renovation budget still ongoing. So
right, because you're still ongoing.
Yeah.
But is there the opportunity to do commercial refinance, like to do based on a cap rate?
No. So that's what I mean. Is so they've looked at the numbers, right? So they're looking at the rent and they're looking at what the mortgage, the largest mortgage they could put on the property, and based on today's rates, it's going to be 640, 645.
That's the mortgage or the
mortgage.
Oh, okay, okay.
So even if the property's worth 950, I could get an appraisal at 1 million. I could get 1.2 and whatever. They said the max you're going to get is 640.
Mortgage.
Yeah.
But that's great.
Yeah.
Well,
no, I bought the place for 600, and I put 100 into it. So I'm into this property for 700. So I'm gonna.
Did you borrow all the money for the buy?
Well, no, but I mean, technically, it's not a full refinance, right? So
yeah, but if it's worth 950 and your mortgage will be 640,
close, yeah.
That ain't so
close.
Bad.
Yeah, it's not bad. I mean, in the past, we were able to do better turns around.
But these are return of capital times.
Yeah. These are not return of capital.
You're getting almost all your capital out.
Almost. Yeah. I will have some money still invested in the property. So.
And some grief.
Yeah, and some grief, exactly.
And this is the truth about real estate investing show.
It's the truth about real estate. That's the thing is and that's the thing is too, is everyone back in the good days was like, oh, I made 200, I made 300,000 on that. It's like, no, you didn't. You just made your mortgage bigger.
You still owe the money.
You still owe the money. The money isn't yours until the property is sold and you've paid your capital gains, and whatever's left over after that number, that's what you made on the property.
Yeah. There's so many places we can go.
There's
oh boy.
But the problem with that too is that when these people did these things, they went on, all the
Okay,
YouTube
sorry.
videos.
Before we go on to
Yeah.
that, let's finish off this
Yeah.
example property, because you and I were discussing how because not everyone knows, like fourplex, I believe it's RBC that will still qualify it as a
Yes.
commercial property.
Yep.
So they will use the traditional cap rate cash flow model versus comparable model.
Yeah.
Right, which is what almost every lender does, is comparable model.
Yep.
Right, so it's advantageous. Again, they generally focus just on the property. Is that what your experience is here? They're the lenders focusing just on the property.
Correct.
Right.
Yeah. I mean, the building is owned as a corporation, right? So
Right.
it's also, I can literally put that in as a building of itself. So it's self-sustaining. They're not looking at other properties. They're not looking at other
Which is the dream.
variables. And that's exactly. That's why I buy properties as corporations, individual corporations.
Right. But this
it's
is a
gonna
fourplex, so it'll
Correct.
fall under commercial lending,
Correct.
right?
Yeah.
And then that way you're able to much better. It's much easier to scale.
Yes.
Using commercial lending.
Correct.
Which is one thing why I like the States, because it's
Yeah.
all for even single family homes. It's all commercial lending.
It's all commercial. Yeah.
Yeah. And then you can scale.
Yeah.
Like, they don't even look at your own personal credit.
Exactly.
They do look at it, but like they're just looking to make sure there's no red flags.
Exactly.
Right. Like you still pay your own mortgage, you pay your rent, your credit's like you're not. You don't have all these outstanding bills on your credit.
Correct. Yeah.
Right. But basically, it's more like a checkbox. Like this guy doesn't owe a bunch of people a lot of money.
Exactly. Right. Yeah, they're looking for delinquencies. They're looking for claims, and
like unpaid childcare.
Exactly.
You know what I mean.
And they haven't caught up to me yet. I haven't acknowledged the children yet, so.
Right. But we should mention you're not married, no kids.
No marriage, no kids. Yeah.
Which is why you have more time available to you for these further commute properties.
Yep.
And you're active full time into it.
Yep.
Right. Because I believe that context matters.
Yes.
Right.
Yeah.
For the gentleman who lives in Mississauga, commutes to Toronto for their big pay job.
9 to 5.
9 to 5. Well, we say 9 to 5, but reality, add the commute. They're generally working
7.
more than 9 to 5.
Yeah.
Right. For them to do your investment strategy,
it doesn't work.
You'll break.
Yeah.
You'll be divorced pretty quick.
Yeah.
Your kids will hate you. Right?
Well, that's the thing. So like the thing is, like, I've always I know I'm living. I've created more balance in the last couple of years, especially because up until now I was very, very aggressive. Up until 2022, I was very aggressive. The last time I was on your show, and I've kind of slowed down. And it's hard to believe a lot of people are like, you slowed down, but I'm adding a little bit more.
Nuts.
I'm still still going, but I mean, before I had all of my buildings, I was buying aggressively. I had a property management company. I had 10 employees. I was all over the place. I was spreading myself really, really thin.
You were living in a building that you're managing.
Correct.
That was not the easiest.
Exactly.
You're a tough boss, big building, luxury. So standards are high.
Exactly.
Yeah.
So I've walked away from a lot of different things to focus only on my real estate.
Yeah.
But I still understand that, like, I'm still not living a life of perfect balance. I mean, the key to a perfect life is to have a life of balance, and that means everything from fitness, mental, family, friends, business, and pleasure, right? Mm-hmm. I'm still lacking in a lot of those areas. I'm very aware of it, right? But those are things that you can't really sacrifice. If you look at the most successful people of society in terms of like business or even music or billionaires, multimillionaires, I've met dragons, I've met billionaires, I've met musicians, and they're extremely successful because
you work with one of the most successful developers in Hamilton.
Yeah. And so when you look at those people, yes, they're successful in one area. If you look at every other aspect of their lives, complete mess. Divorced, don't talk to children, don't
poor health.
Poor health maybe, because everything is about that one thing. Yeah. And there is a part of the entrepreneurial journey is to do that. You have to do that. If you want to be the best soccer player in all of the football league, whatever, you have to stop seeing friends. You have to play 24/7. You have to focus only on your health, focus on your fitness, and just be that person. That means every other aspect of your life is going to fall apart, right? And if you truly want Tiger Woods, he's number one. Where's the rest of his life? Complete mess. Why? Because he let his marriage fall apart. He started having affairs and all this sort of stuff. But he's the best damn golf player.
But not anymore.
Not anymore.
Because he can't. Because he's got balance.
And now, exactly.
Which is great.
Which is
great
good
for his life.
Yeah.
But
so,
he probably won't dominate ever again.
No, exactly. Yeah. And so that's the thing is, so
he may not even win ever again.
There's a phase where you have to have a lack of balance and acknowledge that.
Yeah.
And I'm okay with that because I don't
in
have
spurts.
the life in spurts.
Yes.
So I'm never going to be worth hundreds of millions of dollars or billions of dollars. I don't have an interest in it either. There's only so much real estate investing that I'm actually interested in doing. I don't want employees. I don't want a full-time I don't want to be working in an office currently working on returns, and it's all about life balance for me, right? So
because I guess you're settling down, not settling down, but like finding some sort of stability within the next few years.
Correct.
And then you can really get some more balance.
And that's when I'm going to start. You've seen I've started to travel a little bit more. I don't like winter, and so I like to disappear when the snow falls. Yeah. And that's kind of also my way of achieving some more balance too. So probably, in the next 2 years, I'm going to be done real estate investing. I'm going to have a nice little portfolio.
You're just going to hold.
And I'm just going to hold it.
Not so much growth stage.
Correct. Yeah. Correct. I mean, maintaining my existing stuff. Once a building is stabilized, I'm dealing with the tenants, which if I've placed them, they're very well behaved. They take care of the place, and nothing's going to go wrong. Everything's new. It's been done in the last 5-10 years, right? So, I'm going to deal with the day-to-day tenant calls, but probably in the next 2 years, I'll be done investing in real estate, and my efforts are going to be in different areas. I'm definitely going to be looking at different streams of income. A lot of that's probably going to be passive. Through investing through different various mortgage groups,
lending,
private lending.
Money,
private lending is very interesting to me, especially going to learning about the last couple of years. I mean, the one thing that landlords forget is that we don't actually own anything. I don't own any property. My bank owns property. I just have the name.
They typically
on
own the majority of it,
right? Until
but they don't take any of the equity.
They don't take any of the equity. Exactly, the equity's all mine.
Yeah, the profits are all yours.
And
so is all the downside.
Right now, there's no equity. But yeah, so I mean, every landlord is owned by their tenants, their lenders, their mortgage. So if your tenant doesn't pay rent, you're still obligated to pay that mortgage. Your tenant is your customer, and they can control you based on how the building is, how your relationship is with that tenant. And then same thing with the banks. They always put themselves in a position where they're in the winning seat. So if you and me started a business tomorrow and said, hey, let's both put in $100,000, the business fails and we sell it for $150, we both eat that 50% loss of the $50,000. But if me and the bank go in and buy an apartment building, and the building goes down in value, they say, oh, no, you still owe us what we put in. So I eat the loss, and that's what every lender.
And you can lose beyond your investment.
And you can lose beyond that, exactly. And that's what a lot of landlords are really feeling the heat, because a lot of also private money, they're in a position where they're saying, we want our money back, and there's no money to give back. So a lot of lenders who are over leveraged, or a lot of landlords who are over leveraged, the secondary lenders are getting antsy, and they want their funds back.
Oh, the promissory people are probably the most antsy.
Especially promissory notes.
Sorry, but before we get into that, let's finish off with your own portfolio. Can you give us, can you quantify how big your portfolio is? Like, how many doors do you have? How many properties?
I never answered that question.
Never?
No.
Never?
No.
Okay, how's another way? Like, what is your target cash flow? Say like you said, like 2 years from now, you think you'll slow down. Like, what is your target cash flow from your portfolio? Like, what number will make you happy?
Well, I mean, my intention is never actually to cash flow from my portfolio. I wanna be able to leverage my portfolio to invest in other areas and cash flow from that. So, if I've got 20, 25 buildings, let's say, and I go to the bank and I say I want to borrow a couple $100,000, I can take that and go private lend it. I can go invest it in a mutual fund or something like that, and whatever those dividends are, that's what I cash flow. That's my personal cash flow.
Right. So your cash flow will be the delta between what you can lend for versus what you're paying on what you owe.
My buildings, I've always seen that.
Pretty aggressive.
It's a very aggressive strategy, but it's also also conservative, because I don't want to be relying on cash flow from properties. I've always taken my properties and reinvested any dividends that's from them.
Right.
I mean, if you really think about it too, also, I mean, if you're buying a premium top of the line brand new property, it doesn't cash flow. So I buy old buildings, but they always need something to be done.
Right.
I always need to do a roof, a windows, eaves trough, and and over the next 5 to 10 years, one of those items has to get kicked off the board. That means I need about 15 grand every year to, like, a roof is 15, say 10, 15 grand, eaves trough's 15 grand, to redo siding it's 20 grand, to do parking lots 10. So
and it's all gone up.
It's only going up from there. So you're going to say to me, okay, Adam, you got to pay your mortgage, your insurance, all utility bills. Oh, and then also have $15,000 left over for renovations and cash flow on top of that. It's not happening. It's never happened. It's even in the greatest of times,
Right.
you've never had that much cash flow to actually continuously upgrade your property and use the cash flow and have some in your pockets.
And I'm about to say this is highly fascinating. I don't know if you find this fascinating too. Is that like you're an aggressive investor?
Yep.
Hope you don't mind me saying that. But at least you're watching it closely.
Yeah.
You don't have structural vacancy in your portfolio. No. Not like you have vacancy, but you're actively attacking it.
Correct.
Right.
Yeah.
Because like before we were recording, I said vacancy is poison.
Yes.
Right.
Yeah.
Negative cash flow is a smaller version of poison versus vacancy or bad debt.
Exactly.
Right. But yeah, like, where did you learn this strategy? Because again, like, I'm a little bit older than you. I'm 13 years older than you. So back in the day in 2005, we could cash flow with a single family home. It was really different back then.
I mean, yeah, I think that, I mean, it's really just the realities of the market. If you look at your properties right now and you think to yourself, you probably need to do the roof in the next 5 years. Well, there's 10 grand. Yeah. Well, are you getting that from your cash flow? Then it's not really cash flow now, is it? That's capital expenditure that you have to put into your property. Yeah. And then if you have to do the eavesdrops in the next 10 years, that's another 15 grand,
So I can convince you to come to the States? Because I understand where you're going from, why your strategy is structured the way it is.
Yeah.
Because that's the hand you're dealt in Ontario.
Yes, correct.
Right?
Yeah.
Versus like if I go, what I learned when I was one of my time in Texas, when I learned was I actually I went into a show house.
Yeah.
That was a builder's building like 150 houses and in the show house the construction manager was actually there. So I said, hey, do you mind to ask you some questions?
Yep.
Yeah, I don't mind. Because I'm a potential client, right? I go, like, how long does a roof actually last here? He goes, 30 years. Like, no, I know roofs are rated for 30 years. How long did they actually ask? He's like, 30 years. I'm like, I'm sorry, I'm a Canadian. We're not used to these things.
Well, yeah, because like I have 40-year shingles. I doubt they're going to last 40 years. Yeah. I mean,
because the cold, the snow, the ice actually depreciates them a lot faster than.
Exactly.
Versus I thought the Texas sun would beat the crap out of the roof, but no.
Apparently not. Okay.
Apparently not. And then I ChatGPT'd it as well to like verify.
Yeah.
Because I'm gonna show like he could be selling me something, so I need to verify. I verify everything. But yeah, and so going down that path as well is like. Everything in the house on the exterior depreciates faster in Toronto. Let's use Toronto as an example. Yeah. Windows, doors, brick, exterior, roof, everything depreciates faster in Toronto versus a property in Dallas, Texas.
Okay.
Based on my research.
Yeah.
I can't convince you to come to the States. Because like I was joking before we were recording is like, man, you're a sadist.
I know.
Because a lot of the smart people, which I consider categorize you as smart, because you're actively engaged in your portfolio. You're attacking vacancy. You're doing the best that you can to optimize your portfolio.
Yep.
There's so many people who do not want another long-term tenant property in their portfolio.
Yeah. Especially in Ontario, just because of the way the landlord-tenant board is.
Right, and you're very familiar with it.
Very familiar with it.
You're very familiar with the landlord-tenant board.
Yeah.
And you're like, you just dealt with this justice situation where a drug dealer is in your property terrorizing your neighbors.
And that matter
you don't have justice.
Ironically enough, I haven't been to the landlord-tenant board since 2018.
That is impressive.
Yeah.
But how did you avoid it though?
Because you have to negotiate.
Negotiating. Moving expenses. I like to call it.
Moving expenses from time to time.
Moving expenses and to compensate you for your grief of moving.
Exactly.
I don't like the other term.
Yeah. So the only reason I'm still in Ontario is because, like I said, I'm very calculated in what I plan to do, and like I said, my investment time in Ontario is almost at its end. Honestly, it should have been done by now. Right. In 2024, I should have been done. But this recent inflation, whatever,
interest rates
has delayed.
Faster up than they promised.
So my intention was to kind of tail end and wrap everything up and start, solidifying what's going to be my long-term Ontario holds. Mm-hmm. And that was going to be in the next year, and now it's looking in the next year or two. Mm-hmm. What's going to happen after that is that's when I start looking into the different avenues. And one of those is private lending. Mm-hmm. One of those is to put it into a very secure mutual fund or stock portfolio. Mm-hmm. And then also looking at other areas like investing in the States.
Right. So something incredibly passive.
Yes, correct.
With no long-term tenants in Ontario.
Exactly. Yeah. I still intend on keeping my long-term Ontario holds. Mm-hmm. But just as I said,
they'll likely appreciate well.
Because they appreciate and they hold their value. Mm-hmm. My Ontario real estate, the way I see it is, it's my net worth builder. It's never I buy buildings for cash flow, but I don't use the cash flow for my own personal gain. It's always, I use the cash flow to get mortgages, to buy more property, to increase my net worth.
Yeah.
Like I said, you can't cash flow in Ontario and have the funds to continue to do the capital upgrades on Ontario, as we've seen.
Yeah. Partly because you're quite a leverage. It's quite a leverage
Yes,
strategy.
correct.
You're not putting
You're
a ton of cash into it.
Correct. So you're either over leveraged and you're maximizing, because like I said, I mean, if I was to go in, buy these crap properties, dump $400,000 into them, okay, yeah, sure, I can get the mortgage to cover, but then I'm not cash flowing, right? So if one tenant doesn't pay, now I'm underwater. So that's why I do these projects in stages. Focus on the inside, get them rented, then focus on the outside. What's the first thing that you need to get done? Make sure that the roof is not leaking. Then you work on all of these, and every year I do a different project on my property based on its lifespan. And based on that model, there's never going to be cash flow at the end of it if I'm always reinvesting into my properties. But it is increasing my net worth.
And I appreciate you sharing all this.
Yeah.
Because there's all those folks who are with like hundreds of thousands of Instagram followers are not sharing the entire model.
By the time the mortgage is paid, the interest is paid, the insurance is paid, the water bills, the utilities, all these bills are paid, and then you actually factor in properly your capital expenditures, you're not cash flowing. You're not living off of this income. And you probably never will until the mortgage is paid off, which is 25 years. I'll be north of 50. So my thinking is, my Ontario is my net worth builder, and I'm still trying to build my net worth.
Yeah.
Once I get
Which is done really well for a lot of people.
Which is done really well.
A lot of people.
Once I get my net worth to where I need it to be, and my building's at a point where it's large enough that I can still maintain it relatively passively without outside help, that's when I'm going to start looking for different avenues, which is more aggressive markets like the USA. But the USA, I would say, is more volatile in terms of value and whatnot than Ontario. You put a house in, if you buy a house in Ontario, you're not going to see it go down in value long term. You know, in the 80s, you could buy a property for $100,000. We're never going back there. You know, yes, if you bought a property in 2021 versus now, your property went down. But if you were smart and you can ride the wave, it'll come back. It will come back, and it will only go north from now. Yeah. We're not going to see the skyrocketing of prices. Some say yes, some say no. But I don't think we're going to start seeing the massive $100,000, $200,000 increases that we saw in 2000.
Because there's no reason for emergency interest rates again.
Exactly.
All this foreign buyer stuff is in place.
I mean, we need to bring that back, to be honest. If we think we're going to get over this housing crisis, we need to bring foreign buyers back. The condo developments are being canceled because they don't have foreign buyers. Foreign buyers prop up new build developments. It's a fact. You know,
if they buy up all the condos.
No, because condos need 60% of their condos sold before they even get funding.
It varies.
It varies.
Some as high as 90.
Yeah. So if they can't find pre-sales in the Ontario market, because people who are buying houses to live in are not looking at pre-sales. No one's going, you know, I need a place to live in about 3 years.
We're going to be stuck where like local buyers won't buy and then builders won't build because they can't sell.
Correct.
So then we're
in a rock and a hard place.
Yeah, we still have like 1 million new people in the country.
So if we really actually want to get condo developers to start building again and start building in mass, we need to open the floodgates to foreign buyers.
That's a whole nother story for another episode. But I want to talk about your own story.
Yep.
Because this is the Truth About Real Estate Investing show.
Yep.
You shared it more recently publicly.
Yep.
About like you've been assaulted by your tenants.
Yes.
And harassed.
Yeah. Yeah.
And I still can't convince you to come to America.
I try to. I mean,
you were very detailed and graphic about it.
Yes, yeah.
On your like folks can go to your Facebook, Mr. Adam Kitchener.
Yeah.
Right. Like it's.
So I mean, I always like to say he's not my tenant. I never put him in there. I bought the building with him as the issue.
Fair.
Yeah. So. And I knew I was buying the property with an issue. The previous landlord to me was kind of like, he's a bit of a problem. I think that's the understatement of the century. Because I've bought properties where they're like, oh, this guy's a pain in the butt, and this guy's and it's like, whatever.
It was blame the other guy.
Yeah, and so like, people when they're selling their properties, they probably have an issue problem with the tenant, and that's why they're offloading the property.
For cheap, yeah.
So
that's why you're getting the deal.
And that's why I'm getting a deal. And so
but this was a property you were managing.
No, I bought the property.
Oh, okay.
So the landlord's like, this guy is a bit of an issue. And
not the fentanyl drug dealer. This is a different property.
This is a different property. And like I said, it was an understatement because, maybe it was a bit of, me being cocky, overconfident too, because, like I said, I mean, I've bought properties and people have been like, oh yeah, he's my problem tenant. It's like, okay, well, I talked to him for 20 minutes. He's not a problem. It's, a lot of landlords also don't know how to landlord.
Right.
Don't
know landlord, poor communication.
Poor communication, not doing the bare minimum,
not maintaining the property,
not
bare basics.
Exactly. Most tenants are most tenants, and that's why I try to say, most landlords are good. Most tenants, same thing.
Most of them are good.
The problem is the disproportionate power that bad tenants have over
they
the
can
system.
ruin you.
They can really, really ruin them, right?
They can ruin you. They can ruin the property. They can ruin everyone's experience inside that building.
Exactly, and they can wipe landlords out of the market, and that's what we're dealing with. That's part of why the housing crisis is so bad, is because of the 2%, the 3% of tenants who are taking advantage of a bad system. Yeah. There's also 3% of landlords who are taking advantage.
Yeah,
I mean, the guy in Brampton with 25 people in a basement. Yeah, that's taking advantage of a bad situation. That's
like best case you have a 4,000 square foot basement, 25 people.
25 people, like that's wrong.
And you wonder why the Brampton's forcing out licensing, rental licensing.
The problem with that, and now people are like, oh yeah, licensing, that'll fix that.
Let's get back to your property. Yes. You inherited a tenant.
I inherited a tenant.
How much of a discount did you get on the property?
I didn't.
No. What? No, you must have gotten some sort of discount.
No.
At least no one was competing against you.
No one was competing, but I still paid a very good price. I actually ended up losing on that property. I sold the property at a $130,000 discount.
Shit.
I lost $130,000 on that property.
The tenant was still there when you were selling
Yep.
it? Oh, man.
Yeah. Well, I mean, I was the guy selling it at the discount because...
you overpaid?
I overpaid.
Yeah.
I underestimated the situation significantly, and that might have been a little bit still too bullish on the market, and a little bit of cocky because again, he's a bit of a pain in the butt. It was an understatement. He didn't really give me the full picture.
The seller understated how bad the tenant was.
Exactly. I mean, legally not really. He didn't have to even say anything because the tenants are fine. I mean, he paid his rent.
Yeah.
Being a nuisance is you don't really have to disclose if your tenants. If there's active lawsuits or cases or things like that, you have to disclose those. Yeah. But I mean.
But this is buyer. Yeah. But people, I think the listener needs to understand buyer beware.
Exactly.
Like you don't know.
You don't know.
Right.
And it was a case of buyers beware, and beware was, I was not beware of what I bought.
Right.
So
there was a reason there was no other offers.
Correct.
Right.
And so I bought the property. I ended up selling it at $130,000 loss.
So you got no return on your grief.
I had no return on my grief. Well, there is some light at the end of the tunnel. So I mean, if anyone's ever read that journey, I don't want to rehash the whole thing too much, but
let's rehash a little bit, in case people are too busy and don't have Facebook profiles and stuff.
Right.
Unless it's uncomfortable for you.
No. I mean, it's done actually. It's done actually now. So I basically gave him an eviction notice, an N12 notice.
What did you do to deserve it?
So I fully intended to move into that property.
Yes.
I was out of a long-term relationship. I needed a place to live.
Yes.
So I served him an eviction notice. And unfortunately, the N12 is notoriously misused, and
it's all over the news.
Illegal evictions are rampant.
Yeah.
So
people are lying, saying they're moving in just to evict tenants.
Correct.
For renovations.
And arguably, he looked at me and thought, this guy's not moving to the basement.
Yeah.
In a quick Google search, he knows I've got property. He knows I've got investments. He's like,
you dress well, you take care of yourself, you drive a nice car.
I drive a nice car.
You shouldn't drive a nice car when you're seeing tenants, though.
Exactly.
Go rent a beater.
So, it's when I actually, it has its advantages and its disadvantages. So, when I was, there's a story of the old landlord where what he would do is he would show up on rent day in his Plymouth, his K car, or whatever it is, and he'd be like, oh, time to pay your rent. And they'd look out the window, they'd see his piece of crap. Yeah. And then on N4 day, he would show up in his Mercedes and be like, here's your N4, because it's all about that power dynamic that he wanted to portray. As he's poor on rent day and not poor on rent eviction day. So but I don't.
It's still a bad idea.
It's so.
Because they'll fight it.
Right. So I mean, there's still a lot of legs for landlords to really force rent collection. I mean, essentially, it's rent theft. It's the reason why so many landlords are getting out of the industry.
Sorry, go back to this tenant though. This wasn't about rent.
This wasn't about a rent eviction. It wasn't a wrongful eviction.
Yeah, you needed.
I needed a place to live.
Yeah,
and
you own the property.
I own the property. It's a basement apartment. I'm a pretty simple dude. I mean, I'm not.
You want a house hack.
I want a house hack. I mean, yes, I have a nice car, but that's a small thing. Like, I don't have a fancy watch. I don't take fancy vacations. You know,
you don't have to justify it.
I don't
it's your home. You need a place to live.
Correct. So, anyways, I said to him, I was like, I fully intend to move here. He says, no, you're not. I says, here's the. I'm a landlord. I like educating tenants on their rights and obligations.
Oh, great.
So I said to him, I says, look, if you think I'm lying, and you don't think I'm moving into this unit, that is a fine for me. Yeah. Of $100,000.
Oh, it used to be 10. Okay.
Yeah, I think they bumped it. I think it's $50,000, $100,000. So I said, if I'm lying, it's a $50,000 fine. It's very easy for you to catch me. Yeah. So here's what you do.
This detail for the listener, because if you're moving in, you have to occupy it for
at least
12 months. Yeah,
at least a year.
You can't advertise it for rental or anything else. It cannot be used for anything else. It has to be only exclusively your use.
Exactly.
Or your family member.
Or a family member. Yeah. I said, so call my bluff.
And if not, very easy for them to file a complaint. You're fined.
Exactly. I get a fine, and I got to pay the rent difference between your new rent and your old rent.
Yeah, the risk reward is horrific.
Horrific. Yeah. So I'm like, call my bluff. On May the 2nd, if I'm not into this unit, take me to landlord tenant board. Yeah. I will have no defense. His reaction to that was not to actually go, that's a good idea, Adam. I should call you on your bluff. Because it's an easy win. Yeah. I would have to pay him tens of thousands of dollars and be fined the landlord tenant board.
Or he'd just extort you. You know, it's $100,000. Just pay 50.
Exactly. It could have been a very easy way for him to extort me. Instead, he decided to assault me, say, get out of my apartment, and physically assaulted me. His dog bit me. It was a whole thing. Cops got involved. Bylaws got involved. All this stuff started happening. And from that point forward, I was like, all right, well, I guess we're going to go to the landlord tenant board. 9 times out of 10 too is, if he had been cordial and said, okay, Adam, I'll give up possession, but I need some moving costs, I would have thrown him some moving costs. I would have thrown him a couple of dollars to help him, whatever it is,
Compensate him for
compensate him accordingly. Yeah. But unfortunately, the situation basically very much grew out of hand. And I basically became, from that point forward, the subject of his abuse. So this is the other reason why landlords shouldn't go showboating and bragging about their investments, because he saw me, and I don't necessarily think that I go on these podcasts and say I'm a millionaire. People have always said oh, you're a millionaire. No, I'm not. I owe millions of dollars of debt. I'm not living a fancy high life. I'm not showboating. I'm not pushing guru courses or anything like that. I'm a pretty down-to-earth dude, or I like to think that I am, and I think most people would agree. But he basically looked at me and said, you're a multi-millionaire land hoarding piece of shit, and I'm going to take advantage of that. I want you to pay me to move out, and I want $100,000.
He asked you for $100,000?
He wanted $100,000 to move out.
So he's extorting you.
He's extorting me. And it's even like...
All you would do is want a place to live.
Exactly.
In your own home.
Correct. Yeah. It's like, well, why would I do that? I would just... If I have $100,000 to give to you, I would just buy a house and move into it. Yeah. I'm not giving you $100,000 so I can move into a basement apartment. Yeah. So, especially, even the financial incentive for me to legally evict him wasn't there. I mean, he was paying low rent, but it was also a basement apartment in a relatively small town. The most I could have got was maybe $400 or $500.
What town was it?
Ingersoll.
Okay. Yeah.
And I mean, even after I could have maybe got $400 in rent more. And that's after I redid the entire apartment with brand new floors and kitchens. And I would have had to put like $20,000, $30,000, $40,000 into that basement to get that extra $400. It's a poor investment. Yeah. I had zero intention of fixing that basement and re-renting it on the free market.
But this guy just saw enemy.
This guy saw me and thought, here's a payday. And so that's the other reason why we, landlords need to, stop bragging about these profits that they're not making, because tenants see that and they look at you as a target. Right. The minute you have money, people look at you as a target.
Because for the listener, I think we need to appreciate that. If I recommend the book many times, The Millionaire Next Door. Mm. The Millionaire Next Door is generally a very private person.
Yes.
Like 9 out of 10 times they're private. They do not drive brand new luxury vehicles.
Correct.
I have some clients that do, but it's rare, and it's because they're really, really successful.
Yep.
Right? But they don't post about it on their social media.
Correct.
Right? So anyone who does, typically they're marketing something, they're selling something. So that would be the path I would recommend for most landlords. Is you remain quite private, or at least keep your profiles private.
Yes.
Right. Only share with your friends.
Yep.
Don't let your tenants see what you have.
Correct.
Because you could end up like you.
Yep.
Right.
And that's the thing. So like, short of my car, which I'll add, I bought as a pre-owned car. Yeah. I paid the equivalent of a brand new Kia for that car. Right? But the big fancy badge on the front tells people that I must be, doing very well. Yeah. No, I bought a pre-owned car on a brand that has a really hard depreciation curve, and so I won on that.
And you generally dress well.
And
you're always well. Your hair's done. Your beard's always trimmed. Like you look very presentable.
Yes, but I'm not in a suit, and I'm not wearing a big Rolex watch and whatnot.
But he's made all these assumptions about you.
But he's made a lot of assumptions about me. So my Instagram and my Facebook and all that sort of stuff is private. I don't post a lot. I try to
because you
avoid,
have to. You're a
because
manager.
I have to. Yeah.
I was just on your Instagram, and you're very private about it.
Yeah.
Which I can understand why you have to be.
And it's because
I said LinkedIn, right? I was on your LinkedIn, and you're very private about it, which I can understand why you need to be.
Yeah. But most landlords, especially early on in the business, they feel like they have to be influencers. It's like, we're not influencers.
Yeah. They're doing that to raise money, though.
They're doing it to raise money, right? And there's probably a little bit of ego
and there's nothing wrong with it.
Associated.
It can be done right. It can be done well.
Yeah.
Like there's some influencers who are really good at raising money and have good businesses.
Correct.
Right. They don't have structural vacancy in their portfolio.
Yeah, exactly.
In the tune of 30%.
I think a lot of people go into the industry and they want to be Grant Cardone. You're not going to be Grant Cardone. Like, he posts every day on his jet and his Lamborghini and all that sort of stuff. You can fake a jet, you can fake a Lamborghini. I was like, yeah, I faked both, and I made a post about it. Yes. You can rent a jet.
You can fake the posts.
Yeah.
But I'm like a lightning rod for Grant Cardone because for some reason, if someone doesn't like Grant, it always comes to me. So behind the scenes, when I went down to Miami to meet with Grant, I was down there for a couple days to meet with his team and hang out in his office and meet Grant and his family and whatnot. When the camera's on, we all know what he's like with the camera on. When the camera's not on, complete Southern gentleman.
Yeah.
Very kind, complimentary, generous with his time. You talk to his employees. I spent a couple days with one of his VPs, one of his first employees.
Yeah.
And the general vibe is everyone really likes Grant.
Yeah.
Right. And his investors like him.
Yeah.
Because he makes them money.
Yeah.
And then people, like anyone who wants to become an influencer, understand. You make people money, they will like you.
Yes.
You lose them money, you are a villain.
Yeah.
Right.
Yeah.
So do not lose people's money.
Yeah.
So end of the day, people might not like Grant's social media. I can get that. I totally appreciate that.
Yeah.
But the people that matter the most really like him.
Yeah.
And that's way more important than being likable on social media and losing people's money.
Correct. Well, and that's the thing. So they look at his social media and they try to copy that.
Yeah.
Well,
fake it till you make it.
You fake it till you make it. And also, your tenants are going to see that. I mean, look at the backlash that, the tenants in Hamilton had against the Northern Ontario group. Yeah. Because, you go out into the world and you're saying, I'm a wonderful investment person and I'm making so much money. Yeah. And the people who live in your buildings
are
going...
these yachts and these private jets.
Right.
Doing bottled service at VIP, whatever.
Hosting large conferences and saying, look at how wonderful I am. I'm making hand over fist on these investors. Well, I guess he wasn't now.
Get haters.
Right? But also, these
Your
tenants...
building doesn't have water.
The buildings, exactly.
You're gonna have haters.
You're gonna have a lot of haters, but you're also inviting the haters in.
Yeah.
Yeah. I'm not making hand over fist on my tenants.
Yeah.
And if they see my content, I don't want them to be saying, "Hey, I'm paying Adam $1,500 in rent, and he's telling this guy on the internet that he's making tens of thousands of dollars,
flying away to the Caribbean on a private jet."
And then I wonder why, and then they wonder why their delinquency's so high or why they're getting hate mail. It's like, well, you invited it. If you're going to go out and tell the world that you're a wonderful millionaire, and then meanwhile you're crushing and you're taking advantage of these poor tenants, it's kind of hand in hand. Like you brought it on yourself.
Yeah.
So I'm very private. I'm very vocal. I've told you straight up, I'm not making money on my portfolio.
Yeah. I appreciate you being so transparent.
And I believe that most landlords are in the same boat. You can
if you're in Ontario,
If you're in Ontario, you can fudge your numbers. I can sit here and be like, yeah, my building and Simcoe cash flow is $6,000, and you go, oh, that's really good.
Yeah, you get a lot of them. They have no way to verify
There's
it.
no way to verify it. Well, yeah, no, it does. It makes $6,000
Which is part of this fake it till you make a formula. People can't. Like, there's so many things that people are saying you can't verify.
You can't verify.
Right.
And I mean, it is true. My building makes $6,000 a month. My expenses are $5,000, $6,000. You know, like people,
these folks make like people on these yachts and jets. They're probably rented, and also they're probably financed by other people's
money. Yeah.
Yeah, what they've lent them, money
Correct.
they borrowed.
And
you
the
have to pay
ironic
that back at one point.
The ironic thing is the biggest people who have fallen are also the biggest people who took other people's money, but will also living the biggest. You know, the ones that aren't falling, the ones who are holding their shit together, never once did all of the braggadocious stuff. You know, if you saw someone the people who were posting about eating in fancy restaurants and sitting in private jets and doing all, you know, eating their fancy steaks and posting about that stuff, those are the people that are in trouble right now.
Yeah, those are usually red flags for me.
Those are the red flags. And those are the people who borrowed all the other people's money. The people who are like me and the other people who are still going to make it and get through this, I have never once posted about me eating a Wagyu steak or, you know, sitting in a private jet or flying first class or whatever, you know. I also think they're poor wastes of money anyways. Like I am never once going to pay for first class flight, you know.
There's a time and place for it.
Yeah.
Like if, for example, if your investments are paying people dividends, for example, it's really hard to fake cash flow.
Yes.
Like you are actually, money's going out the door regularly. Because like the classic Warren Buffett dividend paying strategy, right?
Yeah.
You buy stock in a company that's been paying dividends for 30 years. That is next to impossible to fake.
Yeah, no.
Right?
But
so,
that's the thing.
If you're like
that's
that,
time, yeah.
if your people are all paid and getting their regular money, go ahead and enjoy a Wagyu steak. I'd be happy for you, right? Because that means all your bills are paid, everyone's happy with you. That's awesome. Go enjoy yourself.
All those people have less than 10 years in investments, into investments. If you're eating Wagyu steak and you're north of 10 years, I'll give it to you, right? But all the people that are falling now, all the people who are doing all those posting, they have never gone through their first
they haven't been through a
cycle. Right? It's very easy to make money in 2022. You know, there was a lot of investors like, I bought it a month ago and I made 50 grand. It's like, no, it wasn't you. That wasn't your smart brilliance. That's just the market moving forward, you know? So the people,
all these accidental millionaires.
Yeah, that was what it was. The peak of the market, people became accidental millionaires. Now the smart ones, like myself.
No one projected this.
Yeah.
Like, no one projected we'd have all these accidental millionaires. Like people put their money in the way of what they thought would, you know, we'd have appreciation and all those sorts of things. But yeah, no one in their wildest dreams thought the market would have gone up this much.
No, and that's why when people were saying, "Oh, you know, Adam, you're doing really well," it's like, no, hold the phone. No, we're in an isolated environment. I'm going to make money while the sun's shining. Absolutely, I'm going to try and flip these properties over as much as I can, you know, and so that way I can get to a stable point. But at no point was I like, oh, I must be so smart. You know, I'm looking at the prices. I know the rent's going up. I know the mortgages are going up. Like, that's not me. I'm not doing that. I'm not. I didn't suddenly come figure out a hack into making millions of dollars in real estate. The formula's never changed. The market changes, but the formula never changes. Buy real estate, wait. You know, and by the way,
you put a lot more work into that than just wait.
There's obviously a lot of steps in between, but it's not wait 6 months.
And it wasn't easy.
Yes.
And you've had a lot of grief.
It's not wait 6 months. It's not wait 3 years. It's wait 10 years. You know, if you haven't got 10 years into this business, you haven't done it yet. You know,
there's a saying in the entrepreneur world that if your business hasn't survived a cycle, you can't consider yourself successful.
Correct. Right. And so when I say I'm done in 10 years or in 2 years, in about 2 years time, that'll be the 10-year mark for me. I'll be at that 10-year mark.
And you've been through a cycle.
Where I've been through the cycle.
You survived. That's something you should pat yourself on the back on.
Exactly. So I've done my 10 years. And so then it's like, okay, in 10 years time, if I want to go out and eat a fancy steak, sure, I'm going to go do it. And I'm
with refi money. No,
with my refi money. But it's not going to be other people's money. Well, it's not going to be my refi money. I've never spent my refi money on my own personal stuff because that's borrowed funds.
You'll have to pay it back at some point.
I'll have to pay it back. So if I go buy, I could have taken my refi money and bought a beautiful brand new top of the line car. but now I'm paying
Yeah,
for
that's
that
a
car
bad
for the next
asset.
25
It's
years.
not even an asset.
So no, you take your refi money
Yeah.
and you put it into something else that generates cash flow, and that's what you live off of.
Yeah.
That's how you survive.
Yeah.
So
Generates more cash flow than the interest you're paying.
exactly.
Yeah.
So I'm going to take my refi money in 2 years, invest it in as many different vehicles that I can. I maybe buy a small business, invest in a small operator, invest in some private mortgages, buy some stuff in the States, and whatever that generates, that's my stake buy-in money. But also when I do
Until
that,
then, you're eating ground beef.
I'm eating ground beef. Yeah, and that's how this business is. That's how business is done. That's how you survive, and that's how you don't lose $400 million worth of investor funds and $8 million and $50 million and $200 million in Saskatchewan money. Like, that's how you do it. 10 years in the business, and whatever you got at the end of the 10 years, now you're ready to go.
Yeah. Because I've studied law so much, I see other red flags that I didn't previously think were red flags, but we can talk about that offline. Innocent until proven guilty, not here to gossip. Adam, I want to thank you so much for making the trip out. I know you hit some significant traffic. It's as if the real estate gods didn't want you to be on the show today.
They never want me to, because
you call other people's bullshit out.
I do.
But so this is the part where in the show where I like to give my guests free runway. Anything you'd like to share in general? I know we talked about a lot of the scary things about real estate investing, for example. Is real estate bad? I don't know. No,
I think real estate's kind of right now. I mean, I think real estate is I wouldn't say it's bad, but it's in a cycle. Everything comes in cycles. We're just at the bottom of the cycle. So I wouldn't say today's probably not the best day to invest. Maybe wait a little bit longer. I wouldn't wait too long. It's it's a timing of the market thing. That might be something for a realtor to more say. I'm not currently buying at the moment because I'm still trying to clean up some loose ends.
I think the time to buy decision is heavily based on how much cash you have
and how
much debt-free cash do you have to invest. Because if you have lots, I don't know why you're not snapping up stuff.
Yeah, if you're sitting on cash, yes, you should be snapping up some property, and
there's lots of people in pain out there.
There's a lot of
Start with Timmins, Ontario. I'm totally kidding.
There's about 400 houses up in Timmins that are just going on
199.
199, yeah.
And then over 100 in Sault Ste. Marie. And
the point is, you have to look at the market that you're buying in currently, and right now that market is bad. Now, is there deals? Absolutely, because there's going to be someone who's willing to sell their property at a loss or a break even or whatever it is. But you have to factor in, it's like your mortgage is going to be 6.5%, 7%.
Yeah, it's almost impossible to cash flow anything these days without aggressive
turnover,
being aggressive repositioning, they call it, or just heavy renovations like basement suites, garden suites, converting units. But there basically is no cash flow unless you're aggressive.
So if you're willing to go in with that mindset, then you'll do well.
Yeah.
But if you think you're going to go and buy a place and cash flow, no. You've got to think about, it's the same thing. It's survive to 2025, right? Yeah. So invest to survive to 2025. If it was me, buy something today at whatever the interest rate is, lock in for 2 years, and then hope that in 2025, I would hedge my bets that the interest rates are going to go down by then. They're not going up any more than they are, but they might hold them for a very long time. And I think that's probably going to be a year.
It gives everybody more time to buy.
Exactly. Yeah. So buy now with your high interest rates, refinance in 2 years. You'll have even a bit of principal paid down, not much, but and that's the only way to do it. Right. And if you think you're going to be doing the same strategy we did in 2021, it's not going to happen. No. It's going to take longer. It's going to take a lot longer to move properties along.
Yeah, we'll probably normalize.
It's gone back to the way it was.
Which could be like 5% appreciation a year, which is wonderful.
Which is wonderful because the thing is, real estate has never been a get-rich-quick scheme.
No.
It's a get-rich slowly but guaranteed way.
Not guaranteed, but
not
high probability.
High probability. Yeah. If you hold a
property...
You're in
for 10 years, you'll probably do fine.
Exactly. You hold a property, you pay off that mortgage in 25 years, you're fine.
You likely did quite well.
You did exactly. That's people have been betting on that. Our parents did that. They buy your family home. You retire in 30 years, your mortgage is paid off, your kids moved out, you rent a small apartment, and you've got a windfall of cash from your home sale. Yeah. That's not taxed too.
Yeah. High probability, but you still have to be smart about your market.
Correct.
Right.
So that's the way it is, and that's honestly, it's kind of the way it's supposed to be. So if any guru or anybody comes to you and says, "Hey, I've got a fast way to make cash," it's like,
Run.
probably not. No.
Yeah.
If they're promising, stability and slow, there's some truth to that. You know.
But just listen. Hear lots of pitches.
Exactly.
Just like my beginner advice, for example, is like, look at 100 properties, and then you know what the top 20% are like, right? You also know what the bottom 20% are like, and then based on your strategy, you may want the bottom 20, like kind of like you do.
Yeah.
I have the top 20. But again, like once you have enough data once you have like comparison shop, I don't see why more people don't comparison shop. Right?
Well, the other thing too is like I like to take wisdom as a grain of sand, because eventually it starts to gain weight if there's actual truth to it. If one person tells me you should do this, okay, that's one grain. Yeah. And meanwhile, if everyone else is saying this one starts to get a little bit heavier. So everybody gets one grain of sand, and if I start to see that the sand is piling up in one direction, it probably means that there's some truth to it.
Right. Which is typically like long-term, 10, 25 year.
Exactly.
I don't know anyone who would disagree with that.
And old school wisdom, usually also. Yeah. Everyone knows old school cliche wisdom. That's why it sticks around. Good advice sticks around. And so if enough people tell you the same thing, that probably means that there's some grain of truth to it. But yeah, the first guy coming out of the gate saying, I figured out real estate, I got a new way to do it. Okay, we'll see. We'll see. Talk to old people too. Talk to old investors. Everyone's talking to the young punks. The gurus are
You're
never...
a young guy.
I'm a young guy, exactly. But I mean, the people who come out of the gate saying, come and invest with me, it's always 20-year-olds. I mean, I appreciate the hustle. They're young, they're hungry, they want to make something of themselves. But go listen to the old people. Ask some dude who's like 60 years old and has owned property for 30 years. Tell him, I want to invest in real estate. How do I do it? Whatever he tells you probably is the truth.
Probably.
And one, because he has no reason to lie. Yeah. He's retired. He's got free wisdom to share. He's not selling you a course. He's not making money off of you. Mentors. He's also not threatened. If you go to someone who's young and hungry, they're trying to steal as much as they can for themselves. So they have no incentive in helping you build wealth. But an old guy, I'm good. I'm retired. I got my boat. I got my house or whatever. I spent Florida 6 months or whatever. Go talk to that guy because he wants you to make money. He doesn't care if you make money or not, but he doesn't lose anything from it. And that's the same thing with me. It's like people call me. They're like, do you have advice? It's like, no, I'll give free advice. I'll tell you what I think. Because also, I also believe that landlords need to help each other. Yeah. If you buy the investment property next to me and you run it like hell, well, it's just like the guy with the crack head in his building. It's like every other building on that street was affected because that guy ran his building poorly. I want landlords to be smart. I want them to be knowledgeable. I want to get rid of slumlords. I hate bad landlords. I want people to do their maintenance. I want people to have no excuse to hate their landlord. Yeah. So I'll gladly share free advice because I'm not here to steal your property. I got my own stuff going on. So
Adam, where can people reach you?
They can send a request to Instagram because it is private, and follow me there. I do share a lot of interesting stories about real estate, and very.
You and my buddy Tim Hong have some hilarious posts with your interactions with tenants, prospective tenants, people responding to your rent ads.
Well, that's the thing, because everyone's gonna get the hate. It's like, are my rents expensive? Yeah. That's how rent is, and they shout greed.
This is housing inflation.
This is housing
inflation. You didn't cause it.
I didn't cause it.
Yeah.
But
you don't control monetary supply.
Correct.
You don't control how many immigrants come to the country or international students. Wasn't you?
Don't control my interest rate either. So I personally would love to lower my rents. Yeah. I've been saying this for months. The rent is too expensive. Yeah. I want to lower my rents. I would love to lower my rents $300.
Yeah, but you'll go bankrupt if you do.
I can't do it. Yeah. Right. But that means that's $300 back into my tenants' pockets. Go to the movies, go to dinner, save that, go on a vacation, enjoy your life. Every tenant in this country is stuck in their apartments because their entire salary goes to rent and food.
Yeah, it's sad.
That's sad. What does that do? It creates a bitterness, it creates an anger, and where are they pointing it at? Yeah. The food companies, Galen Weston, and landlords, right?
So structurally, some of them just cannot afford to pay you rent.
Exactly.
And then you're stuck 9 months for a hearing.
For me, if I could get the interest rates down, if I could get all my expenses down 30% or whatever it is I need to do, I would gladly give my tenants a rent discount.
But
it's more
there'll be
money
more
in their
inflation.
pocket.
But there's going to be more inflation.
Exactly. So I purely squarely point the finger at government. The government is the reason for all of this. They're also the solution, unfortunately. The only way we're going to get out of it is through government getting out of our pockets.
Which it could be a whole other subject for a show.
Yeah.
Adam, thank you so much for coming in.
No worries. Thanks for having me.
Thank you for watching. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy that I personally use in a virtual free training class every month. Go to investortraining.ca/YouTube to register for our next class. That link's also in the description as well. I publish at least 2 to 3 videos a week here, so subscribe if you want to keep learning from seasoned investors like myself and my guests. And if you're just starting out, feel free to ask questions and comment below, and I do the best to answer each of those comments and questions myself. Again, if you're ready to learn the nitty-gritty about real estate investing from a professional investor, register for our next virtual class. That's at investortraining.ca/YouTube. Thanks again for watching. See you in the next video.